It's time for our weekly market monitor, who has names of high-quality stocks he says are reasonably cheap and could grow double digits over the long term. Joining us is David Yepez. He is the Senior Investment Analyst at Exencial Wealth Advisors. Welcome back, David. Nice to see you again.
Good to see you again. Thank you.
You say you try and identify companies that have kind of open-ended growth opportunities, which is a challenge in this market environment, but you like Delta Airlines. Why?
Yeah, so Delta Airlines is the best run airline in the world. They're transforming the traveling experience by investing the most in technology. So now in the future, when you travel, you're not going to need passports or tickets. It's just every airport is going to have biometrics. So you just show your face to the camera and that's it. And Delta is also improving pre-ordering for meals before you board on your airport, on your airplane and things like that. So it's the best run company in the airline industry. We think the amount of travelers is going to grow over 50% in the next decade. And so we like it right here.
All right. Teradyne is next on the list. Why do you like that?
Yeah, Teradyne is the #1 player in collaborative robots. These are robots that work right next to humans for industrial applications. So think about, light duty things like welding or, transporting goods from one area to another. And so we think we're at the beginning stages of this industrial revolution, and Teradyne is leading the way on that.
And finally, Gartner, which is basically a tech play, an IT play.
Yeah. So if you look at the stock for the past 5 years, it had a big run, but in the past few weeks, it dropped over 20%. We think this is a good entry point because they help CEOs around the world in technology. They provide research consulting to make better decisions in technology decisions, and so they're helping all these companies, retailers, banks for growth in the future.
How do you feel about the economy and the market overall, David, especially given the volatility that we saw this week?
Yeah, we think all the volatility is related to the trade talks and how, the slowdown of the global GDP. But we think eventually there's going to be a trade agreement. It's going to work itself out in probably next year, sometime before the election time. But yeah, that's our base case scenario. We think eventually, if you're a long-term investor, that will help. That's the view we have.
Has it influenced the way you're allocating capital?
Yeah, so for those portfolios that we think they're overweighted in equities, we try to maybe sell a little bit of equity and try to keep a little bit more cash on the sidelines. But we are long-term investors. We're looking 5 years, 3 to 5 years ahead, and we think the market will be higher from now.
David, thank you so much. David Yepez with Exencial Wealth Advisors.